Welcome and thank you for joining us for today's webinar, How a Consumer Durables Manufacturing Multinational Corporation Re-Engineered Their P2P Process with Intelligent Automation, brought to you by IOFM and sponsored by Datamatics. We have a few housekeeping notes to go over before we get started. If you have any technical questions or issues using the WebEx platform, please use the chat box and I will respond right away. If you have any issues with audio, please click on the phone icon above the chat window to receive the teleconference info. For those that do call in, to ensure call quality, everyone's lines have been muted. If you happen to get disconnected, you can log on again using the instructions provided in your webinar confirmation email. If you continue to experience difficulty, please email webinars@iofm.com and we will respond as soon as we can. We encourage you to ask questions throughout the presentation. Please type your questions into the chat box and hit send to submit them. At the end of the presentation, we will have our presenters answer these questions. We will have 2 polling questions during the webinar. A pop-up box will appear when we run each poll. Please choose from the multiple choice answers and hit submit. We'd love to have your participation and insight. This webinar will be recorded and you will receive a thank you email with the on-demand materials within 2 business days. Our first speaker today will be Naveen Gupta, EVP and Head of BPM Services at Datamatics. Naveen brings with him over 30 years of varied experience in the field of project management and business process management, delivery management, and incubating new practices and managing huge enterprise application programs. Naveen holds a master's degree in economics and a DBF from ICFAI. He's also trained in TQM and Six Sigma certified. We will also hear from Neeraj Bazur, Group Cfo of Bluestar. Neeraj has been working with Bluestar as their Group Chief Financial Officer, Company Secretary, and Compliance Officer for the past 7 years. He is a business leader who specializes in finance. Multiple industry experiences spanning more than 3 decades have shaped his exposure to diverse business dynamics. He has contributed as CFO and independent director at reputed and renowned brands. His forte in designing and implementing best-in-class governance, enterprise risk management, and compliance frameworks across several business entities. He is a chartered accountant, a company secretary, and also a certified risk professional. And finally, we will hear from Jess Shear, editor at IOFM. Jess is an award-winning business reporter covering the needs of financial operations professionals for more than 2 decades. As IOFM's executive editor, Jess is responsible for continually updating member content on iofm.com, as well as building our certification and event agendas. He is a popular speaker, hosting dozens of webinars each year and keynoting IOFM's conferences. At this time, I'd like to welcome our speakers and hand the webinar off to Naveen.
Thank you, Jovi. Firstly, let me take an opportunity to welcome you all for this webinar. And I'm sure with the best practices of what Neeraj and Jess will talk about for the transformation of a P2P, you all will carry some learning to see how you can really bring efficiencies and transformation into your process. Thanks once again, Neeraj and Jesse, for joining this session with me on P2P transformation. Before I start, let me just talk about Datamatics. Datamatics is an IT and a BPM service company providing intelligent solutions for data-driven businesses to increase productivity and enhance customer experience. We've got more than 200 customers worldwide, and we are present in 6 countries globally with our global delivery centers in 4 regions. About Bluestar. Bluestar Limited is an Indian multinational electronics company manufacturing consumer durables, specializing in air conditioning and commercial refrigeration equipments, in designing, developing, manufacturing, and marketing products in the air conditioning and commercial refrigeration. They have more than 6,000 stores across the country, around 4,000 channel partners, and they have more than $812 million revenue, which they topped last year. Coming on to the specifics to this webinar, a case study where Bluestar decided to implement P2P transformation project for improving efficiencies in P2P operations. Till the time you really read on the slides, this will be more of an interactive discussion with Neeraj. So Neeraj, let me just start with asking the first question to you. What prompted you to take P2P transformation project?
Thanks a lot, Naveen. First of all, I would like to thank Naveen, yourself, and Jess for inviting me over for this webinar. It's indeed a pleasure and a privilege to be amongst all of you today and to share some of our learning as well as experience in this regard. Naveen, coming to your question, what really motivated us to go for this transformation project on our P2P process? I can think of three reasons top of my mind. First and foremost, we were keen to significantly enhance the experience of our suppliers, our vendors, as well as our internal customers, essentially the teams which are involved in purchase and procurement. So this all started as a process where, an initiative where we wanted to make sure that our stakeholders are more satisfied and essentially riding on greater transparency, because procure to pay process can have elements where transparency could get a little constrained or limited, and we wanted to make sure that we elevate the levels of our transparency such that our stakeholders, basically our partners in our business, they get to enhance dealing with us and enjoy dealing with us as a business. So that was the first reason. The second reason, of course, was more commercial or more economics driven. We wanted to ensure our procure to pay process becomes more efficient and more productive. It was a bit fragmented before we took on this transformation process and project, and we are based across the entire length and breadth of India with multiple manufacturing plants and multiple selling offices. So we had a situation where this was a bit scattered, and we wanted to make sure that it gets consolidated with proper oversight and, like I said, therefore start making it more transparent and more visible as well as more approachable. And last but not the least, it was to do with ensuring that we make this process scalable. We have been a fast growing business, and we've grown pretty rapidly in the last few years, and we believe that in line with our growth aspirations in Bluestar, the underlying procure to pay process should also be scalable, such that the design that whatever design we wanted to achieve could scale as we grew the business. So broadly, these are the three objectives: enhancing customer satisfaction, making the process efficient and productive, and of course, scalability. Those were the three reasons.
Thanks, Neeraj, for that. But if you look at the impact, Neeraj, and we can clearly see 7,000 plus vendors onboarded on the vendor portal, 33% improvement on the invoice processing time, and 98% payment request processed within the turnaround time. So those are the impacts today, right? Mm-hmm. But if we look at the entire journey, how long did it take to stabilize your transformation journey till what you have been able to achieve?
Excellent question, Naveen. The journey is never easy. The journey is never a straight line. So yes, it took us some effort. It took us some learnings, unlearnings, relearnings as well. I'd say that we started getting results, and Naveen, you were equally a part of this entire process. So we started getting the results in around 6 to 9 months, early results, I'd say. And I think the stability took us close to 18 to 24 months in order for these results that you're showing on the slide in front of the screen to get to these levels. 18 to 24 months. But yes, a lot of collective wisdom, collective efforts, and a lot of changes through the process in this journey made this happen, I'd say.
So Neeraj, what were the most crucial, I would say, part in throughout the journey and the KPIs during the implementation, which you really put on the board and for the team to challenge upon?
Yeah, another good question, because the way we wanted to approach this entire P2P transformation, we didn't want to set up, let's say, a supplier or a service provider relationship. We wanted to ensure that we approach the problem and we co-own the problem jointly with our partner in this process, and then we deliver the outcome again collectively. So that was the spirit, and that was the approach behind us setting this entire process up. So there've been challenges, I would say. The crucial KPIs that we agreed or we wanted to achieve were indeed a little far off. In order for us to get to that KPI stage, I would say the crucial elements were change management to begin with, and there was indeed a lot of change involved, both internally within Bluestar and also externally with our suppliers, vendors, and also how we approach this entire process execution with the implementation partner, that is Datamatics. So a significant change management initiative, a change management program was designed, and then we worked on it. And like I said, collective ownership. It wasn't like something that Bluestar wanted to achieve, or we just outsourced the problem lock, stock, and barrel to Datamatics. It was collectively owned and collectively executed. That's how, I guess, was a very crucial part of this entire journey. And the KPIs, of course, process outcome, what's visible on the screen in terms of process improvement, TAT reduction, and above all, satisfaction enhancement, which also we took several surveys to figure out. And last but not the least, a key KPI in terms of cost of the process itself, because when we are when we thought through the entire dynamics of how this new process should operate, ensuring that the process itself becomes more cost effective as we scaled up was indeed a key KPI on our minds, and to my mind, I think we've substantially achieved that.
Well said, Neeraj. Well said. And now coming back to the vendors and supplier, right? You were talking about building transparencies for them, and as we all know that not every vendor is a tech savvy, right? So it would have been really a difficult journey to onboard all the vendor to start. So how did you overcome that? Like, what did you do to really make sure that 7,000 plus vendors are onboarded on the digital platform?
Yeah. Sorry. Indeed, quite a few of our vendors were not tech savvy. That's quite true. So a structured communication program, explaining them why they should onboard, what is in it for them, what is in it going to be for them, and ensuring that they understand. So we made sure that this was not a top-down enforced process because Bluestar wanted it. We went that extra mile to build that bridge of communication with the suppliers to get their buy-in, to get their acceptance. And you'll remember this, Naveen, when we were designing in the designing phase, the planning phase, we had quite a few prototype stage discussions with suppliers. We got them into a focus group, into a meeting room. We took their inputs and we incorporated some of that as well. In addition to that, for the suppliers to get aligned, it's very important that the internal stakeholders, our own procurement team, the procurement managers, the buyers got aligned because they are the ones who interface with the suppliers day in and day out. So we sought their buy-in as well. Having done this part, then we took on fairly comprehensive training initiatives once the process was rolled out or process was to be rolled out. We made sure that we were communicating with them in a variety of manner, through training programs, by giving them posters, brochures, FAQs. We also had pre-recorded video messages or video programs we created a help desk for them, for the supplier, so that if they had any trouble logging in, if they had issue identifying which screen to access and how to go about uploading their documents, etc. So there was a help desk. There was a toll-free number given. They could call that up and they could get help. Essentially, we focused a lot on communication, engagement, training, and seeking feedback. And that ensured that the suppliers were heard, our internal stakeholders were heard. And I guess that gave them a lot of confidence and comfort, and that's what helped achieve this level of digital interaction with them eventually.
Thanks, Neeraj. Now, really, when you embarked upon your journey for the transformation, right, you would have discussed with your team to go on that journey, right? So how long did it take really to find the right partner for this transformation journey?
I guess it took us around 3 to 4 months, because we had initiated a request for proposals from a number of service providers in India, and the entire process of evaluation, shortlisting, and then finally concluding with the partnership with Datamatics. I think it took us around 3 to 4 months.
And what were you looking for in the right transformation partner? What were your evaluation criteria when you were finalizing the transformation partner?
Yeah, very important point, Naveen. So first and foremost, technical competence. That's something we were very keen to look for. Actually, we wanted to ensure that whoever we work with is not only having competence in terms of a business process management. We were equally keen that the service provider should have technology and digital process management capabilities. So the mix of two is quite effective. Would be quite effective, because we were looking at transformation. So technical competence was the first one. The second was, of course, the past track record, proven track record. What does the partner bring on the table in terms of past or similar such projects, and what is the extent of complexity the partner has handled, and what is the proven record in that context. The third one was, we were keen to work with someone who would be solutions oriented rather than, someone who will only be myopic, looking at the engagement terms every now and then. We didn't want that. We wanted somebody to think out of box, somebody to be really solutions oriented, to co-own the entire challenge jointly with us, and then equally, be a partner in that journey to deliver that outcome. And last but not the least, a partnering DNA, somebody who has a DNA of partnering and not a very cold transactional relationship of, client and service provider. So those were 3 or 4, I would say, attributes, and we were quite sure that we want to have somebody, and of course, Datamatics has an excellent mix of all these 4 or 5 attributes, where we're very happy to deal with Datamatics for this process.
Thanks a lot, Neeraj, for saying that. And before I move on to the next question, Jess, would you like to go for a poll question right now with the audience?
Absolutely. This has been a great opportunity to learn more about Bluestar and Datamatics. But let's learn more about those on the line with us. Thank you, Joby, for launching the poll. Which of the following statements best describes the current status of your AP automation journey? Already fully automated and have no plans for further automation. B, we're partially automated right now. C, we plan to automate key AP processes in the coming months. D, we want to automate but are struggling to create a business case. E, we have no plans to further automate AP at this time. What we found when we did some benchmarking earlier this year is that 77% of organizations already are partially automated, option B. So I would expect that to be a popular answer. The question is, what additional automation is necessary? What additional automation have they found that they that can help supplement and complement what they've already purchased. I think that we're going to see significant results around C and D. I think part of the challenge is that automation is typically a once in a career opportunity. And so it's hard to continually make the business case, particularly to a CFO, which I think is one of the reasons why we're so lucky to have Neeraj with us to talk about what's important here. So as expected, the largest piece, certainly not the majority, but the largest group of folks are around answer option B, we're partially automated. But if you combine the next few, roughly 1 in 4 are either planning on automating or sure would like to, but need some help making their business case. So I think that's where we can certainly take the conversation next. Any surprises here, Naveen?
No, I think as expected, Just. Thanks a lot for the poll question. And basically now Neeraj, having achieved and reached in this journey so far, so would you like to talk about your future plans on the P2P transformation with the audience so that they can also get some direction looking at B, C, D, the most prominent answers to this poll question?
Yes, Naveen, I was looking at the poll, with great interest, and it was interesting to see that while there is a partial automation already in place, there's a fair degree of interest on doing more. Yes, coming to your question, Naveen, so of course, yes, we have a stable process now. We have, the turnaround time and the process KPIs, efficiencies have gotten better. We have a set of suppliers and buyers who are happy. So it's working well. But in my view, we have just scratched the surface. We are at the tip of the iceberg. More needs to happen and more can happen. That's my view. So what do I see from here on? We can significantly step up our digital interface with the supplier community. So what do I mean with that? Wherever we have a set of suppliers who are probably more evolved, who are probably getting on the curve on automation or digitization, how do we set up APIs with them so that we are kind of fast forwarding the entire interaction digitally with those suppliers? Moving beyond APIs, how do we deploy RPAs more effectively into this entire process? We haven't yet even spoken about artificial intelligence, but I do see tremendous opportunity once the data stabilizes, once the process really becomes consistently stable. So those are the next, I would say, orbit shifting maneuvers that we can consider on the digital interface for this process. I would be keen to have or to see this process become or set up a framework, set up a platform for us or an environment for us where we can do predictive analysis on either supplier, supply side behavior, on our procurement effectiveness, on even a simple matter such as what is the key learning in terms of what is emerging in terms of supplier interaction. So a lot of predictive analytics can be made possible, which can then be used for us, feed it back into our business decision making. And lastly, I would like to see a significant reduction in human interaction. Not because we don't want people to interact, but to the extent we can look at any rule-based element of the process being substituted with a digital element. We will be further enhancing the scalability of this process in a big way. And if at all, Naveen, just to conclude this thought, we all have experience in the last 2 years during COVID times. One of the reasons why our entire business operations was back on track. We recovered our operating momentum, operating rhythm reasonably fast, because this process, of course, we have some more digital processes on the O2C side, but this process on the P2P side, since it was already digitized, it was already stable. While yes, we went through a disruptive phase, but we came back on track fairly quickly. So we have in a way experienced, we have tasted the impact of what digitization can bring on the table in a disruptive phase such as a pandemic like COVID. So I'm quite confident that the next wave of process improvement, automation, and further digital footprint enhancement can add far greater value. So that's broadly you can say it's a wish list or a desire or a dream, whatever you want to describe this as. But yes, I have a feeling a lot more can happen.
Sure, Neeraj, I totally agree with you. And maybe there would be some audience also asking some question where we can elaborate more about it. Sure. But before going on to the audience question, Jess, would you like to ask second poll question to the audience?
Absolutely. So, Jovi, if you could launch the second poll for us. The question here is, what's the biggest factor driving AP automation in your organization? Right? There's lots of different ones, but which is, if you had to put your finger on just one, which of the following would be most important? Is it improving APT productivity, efficiency? Is it lowering invoice processing cost? Is it improved cash flow and management of cash? Is it lessening errors, enabling faster invoice processing times? Or is it supplier enablement and ease of invoice submission? Ultimately, the goal is probably all five of these, but it's important to have at least one driver that's your North Star, that you're driving toward. I think if I had a hazard a guess, I would suspect that A and B are going to be among the most popular, in part because the more you're able to improve efficiency, you're able to drive productivity. But the interesting part is that effectiveness, lessening errors, is a huge driver. So that's interesting. When we do our benchmarking at IOFM, we look at both efficiency metrics and effectiveness metrics. And so efficiency metrics certainly are part of the equation, but you don't want to go so fast that you're making errors. And I think one of the things that we may be seeing is folks beginning to automate, beginning their journey, as you've been describing. And in the process, they're in that destructive phase where that you so eloquently described, where things might get worse before they get better. And in that process, you're making more errors than you used to. And so I think, part of what may be driving the interest, and certainly what I suspect we're seeing in the polling results, is a desire to reduce the errors that are being made. So I find this to be really interesting. Any surprises, Naveen?
No, I think that's I totally agree with the audience, because today all the other ABC are related to the errors. The moment your errors are reduced, the more accuracy is there. It has the direct correlation with ABC, whether it is increased productivity because you don't have to do a duplication of a job again, or decrease cost because you are not doing duplication of a job. Your effort to complete the transaction is less, so again, less cost. So I totally agree with the audience that actually is the prime driver. And also, as Neeraj was saying, supplier satisfaction, because more accuracy is there, you would see the higher the supplier satisfaction because of delivering first time right or more accurate outcome on the entire P2P process. So Jess, now I think more or less I have covered what I wanted to cover on the questions with Neeraj. Any questions from your side to either Neeraj or me before we switch Absolutely. On to the audience question? Yeah, go ahead.
Yeah, and we're already getting questions from the audience. So please insert your questions in the chat window, and we'll get to as many as we can by the top of the hour. Speaking of metrics, we talked about KPIs a couple different times. So that's where we'll start. We got a question saying, in order to get my CFO's attention, I need to have some serious numbers. what data is most important to have when presenting your case for automation? What are the key KPIs to look at? So really interested in knowing, Neeraj, what drove your desire to automate, what measures you look at on a regular basis if you've got a dashboard, and then I'll share those that we share with our members as well.
Yes, Jess, thanks. This is an interesting question, and I presume the the temptation would be to quickly look at cost of processing each invoice or cost of the transaction as a key metric. While that is indeed an important metric to focus on, and what can be done on that cost per invoice or cost of each transaction, in my mind, the other important KPIs are, like I said, to what extent is the process becoming scalable, and how much of the process is capable of being delivered without manual intervention. Because see, when I say these two things, and the two are linked in some ways, in the last poll, I guess a majority of your participants were looking at error rate reduction, which is an important consideration, because see, you cannot afford to have a situation where either a supplier goes unpaid, or supplier bill goes unpaid, or a supplier bill is paid twice, or a supplier bill is paid for an incorrect amount, which leads to a lot of dissatisfaction, dissonance, etc. And the digitization addresses a lot of that problem. At the same time, looking at purely from a CFO's perspective, the kind of control assurance and control enhancement more around preventive automated controls rather than getting into a process where the controls are established after the event, which is nothing but a reactive control environment. So these are the 3 or 4 lenses I would look at. And finally, I would say, before I look at the cost, I would definitely look at supplier satisfaction as an index. And where are we tracking there? Because a happy supplier, a happy vendor would go an extra mile to grant competitive procurement terms to us, because they would rather deal with an entity which is transparent, which treats them fairly, which treats them with respect, and which is open to listening to them, rather than getting into a situation where they have to literally fight out their case for either supply or payment collection every time. So it is a basket of KPIs, Jess, to be honest. It won't be 1 or 2 of them. These are all collective KPIs that I would look at.
Really interesting. We do a lot of KPIs. We've never tracked the relative happiness of your vendors. Just out of curiosity, do you do polling and survey work of your vendors to see how happy they are? Is it more anecdotal feedback?
We do regular surveys. We float questionnaires to them, and then we rate the process experience across a number of parameters, and that's an important learning that we use to continuously enhance or fix problems or to fix the gaps. And yes, it can be measured objectively.
Right. You've described this many times as a journey. There is no end state. You're not getting to a final state, but it's about continuous improvement. And I think what you're describing is really, really important. There's no right or wrong answer here, so I'll also just chime in with what we provide for our members, and that is a balance of efficiency and effective metrics. But to be honest, I'm going to steal yours and see if I can figure out some way to capture vendor happiness, because I like that one a lot as well. But in terms of efficiencies, it's the ones that you would expect to see, and I think you touched on invoices per FT, paid on time rate, cost per invoice, those kinds of metrics. Those are really dealing with the speed at which you're currently processing invoices, and then how much faster you're able to process them as you automate, as you improve your processes. But you don't want to go so fast that you're making errors. And so we also have a balance of effectiveness metrics, things like PO first pass match rate, share of PO invoices with a mismatch, share of duplicate payments, those kinds of things, right? So you're tracking both quality as well as quantity, right? You're looking at speed as well as error rates, and the goal isn't necessarily to focus on one at the risk of the other, but to try to find a balance where you're making progress on both fronts. So I think there's a lot of things to think about when finding those. And I think what's really helpful about your perspective is, while we think about what would be most helpful from a P person's perspective, at the end of the day, we need to impress our boss's boss, the CFO. And so your insight was, I think, really helpful on several fronts.
Yes, completely agree with you, Jess. Yes.
Okay. The next question is for Naveen, and that is, we're getting questions about what Datamatics integrates with, because there's a number of organizations that have already bought some third-party systems or already have an ERP system. So are there certain systems that you integrate better with than others? How easily do you integrate?
So thanks, Jack, just for that question. Because if we look at Datamatics offering, right, and that's what Neeraj was pointing out earlier, a blend of technology, process, domain, and expertise. Because if you look at the slide of the entire P2P, O2C, R2R, FP&A process, with the help of a technology, which is our own proprietary tool like TrueCap for data capture, IPM workflow, iMark, IDAT, TrueBot, which is our own robotic process platform, and then TrueBI, which is a business intelligence. If you only look at P2P, we help our customers like Neeraj with the entire procurement, vendor management, invoice processing process. And all of this is complementary to any of the ERP customer may have, whether it is SAP, Oracle, PeopleSoft, Lawson, JD Edwards, MapX, or anyone. So it is easily integratable. Ours is a very technology agnostic solution, which sits on the top of any of the ERP customer may have, to give them a blend of technology, automation, digital transformation, and ultimately process transformation to really achieve their journey of entire P2P transformation. Because if you look at the elements of implementation also, right, your centralized invoice processing with BRS and payments, your bank reconciliation and payments, vendor portal, workflow, mobility solutions. And that is where, when Neeraj was talking about, even in pandemic, that how fast we came back, although there was a disruption because there was a sudden shutdown, lockdown across the globe, but how fast we approached the entire process because we were digital. And we were integrated with the ERP of Bluestar. And same is the case with other customers as well.
Interesting.
Yes. Yeah.
I'm sorry.
No, I was just saying, does that make sense? What's your thought on that? Yes.
It does. It does. Very much so. The next question that's come in is a common problem we see with our members all the time. That is the issue with duplicate payments, duplicate bills rather, leading to duplicate payments. We have invoices being sent electronically through paper, often multiple paper invoices with multiple electronic invoices being sent in, right? Wondering from both of your perspectives if there's been a way that the Datamatics tool has been able to reduce those.
So Neeraj, would you want to just touch upon this, or you want me to take it up?
Naveen, why don't you take it up? I think you can explain this much better. We have a solution. Go ahead, please.
Right. So as Neeraj was also talking about AI and ML, artificial intelligence and machine learning based solutions, right? Today, with the help of technology and the transformation, we do two-way, three-way auto matching within the system, which is in our platform. And also on the duplicate payment. In fact, if you look at the KPIs, one of the KPIs which is transactional, which we Neeraj, myself, we all look at those KPIs and the steering committee, is the duplicate payment. And duplicate payment for most of our customer, because of auto matching and auto exception handling of a duplicate payment, has come down to even less than, it is in decimals. It is not even, I would say it's close to 100%. And that is how we are leveraging technology to make sure that even though you may have the same PO number, same PO date, maybe same invoice amount, and maybe same item category, but still system is able to pick up that yes, this is a potential duplicate, and you may want to look at it before you process the payment. So we have used the technology to really maximize using AI, ML, as well as your auto capture with validation, which is giving us insight to help us automate the process of flagging of potential duplicate payments, and then looking at the exception management and either rejecting it, and if it is not duplicate, of course, paying the supplier.
That's important, because I think that's something that you just can't do manually, right? If you're processing invoices manually, all the checks you just described would easily go over someone's head, right? They're not going to recognize that there's the same date, the same amount, et cetera. There really is that need for an automation check.
Absolutely, and that is because manually, even if you can skip, even if you are saying that it is the same invoice number, or maybe different item, or the amount is different, or a supplier has given a partial shipment against the same PO number, it is the automation which is helping us really looking at the exception.
Right. One of the things we've seen each of the last 3 quarters is that the average size of invoice is going up. And so if things do slip through the cracks, the odds are that's a bigger and bigger invoice that you're making a duplicate payment on, which means that the risk is getting greater. And the number of invoices is also going up. And so if you're trying to manage all this manually, you're in a world of hurt, which may be why those effectiveness measures from the poll are so popular right now.
Absolutely, Jess. And yeah, go ahead, Jess.
I was just moving on to the next question. Was there anything else you wanted to add?
No, I was just saying that, and that's the prime reason, because we do look at the duplicate payment, but what we also have to look at, how much is the effort going in the recovery if the duplicate payment has been made, and what is the cost of capital during that time frame where duplicate payment is still outside there in the market with the suppliers.
Right. We've been talking about this sort of in a silo, just thinking about finance, the AP world, CFO's office, but obviously there are others. One person is writing in asking, what role should IT have in automating?
So basically, yeah, Neeraj, yeah, I was asking Neeraj too. Yeah, Neeraj, go ahead.
Sure. So good question. What role should IT have in automation? IT's role in automation is that of an enabler, because IT will probably provide the best possible solution, of course, in the most efficient manner on the table. In my view, a lot of times I have seen organizations make the mistake of expecting or asking IT to front end or lead the transformation initiatives from the front. That is a mistake, because you got to have IT partnering with business or business partnering with IT, whichever way you want to describe it, in a collaborative manner. Otherwise, there is problem waiting to happen. And that's what the role of IT ought to be, because eventually, understand, whichever process we are wanting to automate or digitize, it needs to serve the ends of a customer. And unless a process gets designed keeping the customer's requirement, the customer's expectations, and the customer's needs and wants in mind, firstly, there will be challenge in terms of getting complete buy-in, and as well as the process itself will succeed or fail depending on how well it is serving the requirements of a customer. And in that context, I see IT's role more as a partner role rather than taking the front seat or the steering wheel in their hands. And that's how we have attempted to drive most of our automation initiatives in Bluestar.
Absolutely. I think, best practice is still to have someone in AP help to choose the tool. And we can get into that. We're getting some questions around the evaluation and selection process in a minute. But I think, having AP choose the tool or make recommendations for the tool that they're going to be living with is important. But IT knows what inputs from the procurement tools are going to provide the inputs to that process, and the outputs and how they're going to integrate into whatever accounting systems may exist. And so, IT is a huge partner, and being able to lean on IT to better understand which of the tools might integrate best, might fit best, and there are probably technical questions that they would have that, as an AP professional, just wouldn't occur to us. Right? We're thinking more in terms of how the user experience is going to be and what features we're going to need and whether this is scalable as we continue to grow. But there's probably technical questions that IT has that can help guide us as well. So I think that's an important question. So that segues to our next question about the evaluation process. And again, Neeraj, I'm going to lean on you. Can you share your evaluation process, how you went about selecting the technology and the vendor?
Oh, well, yeah, you're asking me to share the secrets on the same call as Naveen.
I want you to spill it.
Yes. No, of course. Now, the relationship and equation with Naveen has changed from the time we started working together. Well, so I would say the evaluation was kind of a 360-degree evaluation, covering those 3 or 4 points that I mentioned earlier, right from technical competence. In our case, we gave weightage to the technology, the development, platform development competence as well, and of course, business process management capabilities. We did take from Naveen some references, or we spoke with some of their clients, their customers, drew some assurance, and there was some weightage given for that part. And last but not the least, the most interesting part of this conversation is always commercials, and it all boils down to the cents and the dollars, which eventually do play a role in the final selection process. So it's a mix of technical, qualitative, as well as commercial aspects of the the entire engagement.
Great. Yeah, I think there's a lot to evaluate. For IOFM members, we have examples of RFPs and RFQs, requests for proposals, requests for qualifications. And so you can use those to adapt and adopt for your evaluation and selection criteria as well. With this slide up, Naveen, someone saw what's in the top left corner, wondering if you can articulate more about what your offerings are in the F&A space. It looks like they're looking to move beyond just what we've talked about so far.
Sure, Jess. So on the F&A space, Datamatics is providing entire procure to pay as a service as well as a platform. Entire order to cash cycle, whether it is order management, customer management, billing, cash application, collections. And of course, record to report for helping customers with the GL accounting, intercompany, fixed assets, month-end closing. And FP&A, where we are doing a segmental reporting or cost benefit analysis, planning, budgeting, and forecasting, financial statement analysis. And in fact, particularly on the FP&A, the last 3 financial statement analysis and preparation of analysis are everything through AI/ML. It's a very interesting program, and anyone from the audience, if it's interested, we can have a separate session. where our powerful AI ML engine does the auto analysis of any financial statement, whether it is 700 pages, 800 pages, or whatever it is. So this is a complete bouquet of services on our FNS side, which is P2P, O2C, R2R, and FP&A, which is again, to reiterate again, is complementary with any of the ERP you may have. We can integrate it totally.
Interesting. Thank you. We continue to get questions. We've got about 10 minutes left. So just continue to add those questions to the chat window. Anything we don't get, we'll respond one-on-one afterwards. One of the things that folks are asking about that we haven't gotten into yet is process mining. And I know with your Six Sigma and total quality management background, we might need a lot more than 10 minutes to talk about that. But wondering if this product also gets into process mining and specifically how that can help drive efficiencies in the P2P process.
Absolutely, Jess, because as Neeraj was saying, the most important thing is the change management. We have to look at the as-is process, and then, of course, using various Six Sigma tools and TQM tools, we have to define what is going to be the to-be process, right? And what are the differences from an as-is to to-be, which is really going to make a difference to the businesses and the KPIs as well as other qualitative aspects of the internal and external customer or supplier satisfaction. So when we do the entire FEMIA or our DMAT methodology on the Six Sigma as well, we map the process and then we look at the transformation of a process, whether it is a reduction of a fact from a process or bringing more efficiency to the process or really building more accuracy to the process, which in result again increases efficiency. So those are definitely process mining is done with each of our partner customer to make sure that they are getting the full benefit and they are leveraging our expertise, our platforms, as well as efficiency to bring benefit to their business.
I think that's a really important point. And being able to understand where the inefficiencies are is huge. It's the homework that has to be done before any automation project can really generate the kinds of results that we've been talking about for the last 50 minutes or so. All right, this is going back to the question that I was asking earlier about happy suppliers. Someone's asking if you could spill the beans some more in terms of how you quantify it. You said you did some survey work. Is it just a laggard scale of satisfaction to lack of satisfaction, or are there ways to quantify relative happiness of your vendors today versus, say, before you're going through this process?
It is the survey that we do typically has around 5 to 6 questions, and they are very specific questions pointed towards a particular element of the process. So, for example, we may ask a question on the ease of accessing the portal. That could be one question. Another question could be relating to their overall experience on the payments, regularity as well as accuracy of the payments that they receive. Another question could relate to how are their queries, their questions, their doubts, and if they have anything to follow up, how happy are they with that part of the process. So typically what we do, there are few elements of the process where we would like to get an affirmation or the supplier's response on how they feel about that process. And then of course we always make sure that every survey has a free-flowing, open-ended question. They can descriptively share anything, any suggestion, any feedback, or anything that they want to write in their own words is something that we definitely collect, because then some substance of all these responses is used by us to do a scoring of the process from a supplier's perspective, and how it's moving, or how it moved, say 3 months, over a 3-month or a 6-month period. And then it's helpful in a review to get a perspective on.
Interesting. interesting approach. And at the beginning, when we were describing your organization, I think you have thousands of vendors. So the question becomes, do you send the survey out to everybody that you have an interaction with, or do you just do a relative sample?
We usually do a sample, but we also try and make sure that by rotation, we are able to capture the voice of as many suppliers as we can. Now, interestingly, within Bluestar, one fact we did not mention yet, while at the surface it appears it is a single procure-to-pay process, but in reality, since we have 5 or 6 different business entities within the organization, so there is a manufacturing entity, there is we have what we call projects business. That's a very different organization. Then we have a maintenance contract service organization, and then we also export. So there are some 5 or 6 different organizations within the legal entity, and the procure-to-pay process works a little differently for different business models, and we do also have certain common suppliers across different invoice types as we track them. So it's fairly complex, and of course, to make sure that we collect the voice of as many suppliers as we can. Certainly, the suppliers who are not just larger by scale or size, but also the smaller and the medium suppliers. It's important to hear from them. So we do rotate them, but it is on a sample basis.
It's a really, really smart approach. Thank you. The next question is for you, Naveen, and that is this a on-premises or cloud-based solution, or does it come in both varieties?
This comes in both. For example, if we talk of the Bluestar, it is on-prem, but this on-prem is, as Neeraj mentioned, that the partnership is a unique in a fashion, where even the data center is hosted at Datamatics. Not only that, even the physical people, the entire process is co-located at Datamatics. But as a solution, it is there with a couple of customers. It is on cloud with and on-prem. Both options are there.
Right. Okay. To be able to get the results that you're able to generate, presumably there was a lot of homework that had to be done to prepare. Rich, can you describe some of the prep work that was done in order to prepare for the automation?
Yes. So before we launched, this partnership with Datamatics, we did carry out a fairly comprehensive and a bottoms-up process mapping exercise where we documented our old state or as-is process, as we call it, just to make sure that we capture all the elements of our old process, and we also document all the pain points. So we went and spoke with all the stakeholders. We collected their inputs, feedback, the pain points, the grievances, and whatever issues they had with that process. Using those as building blocks, then we started designing the new process, and the idea was to address as many pain points as we could in the new process, while at the same time integrating the other strategic objectives in the new process design. So that's how we went about it, and there's quite a lot of effort went in even before we launched into the actual process execution with Datamatics. Then, of course, as we started working with Datamatics, we got to refine that somewhat more, and then it was also to do with documenting the new SOPs as well as policies that that needed to be redrafted or rewritten. So that homework is indeed required, because that unless you spend time, so to speak, sharpening the axe before you start really grinding it, chances are that you will spend more time if you try and do it on the fly. So this is an experience which, in our from our perspective, did help us.
Absolutely. I spent 5 years as a process consultant before joining IOFM, and I can't tell you the number of organizations or how much money and time and energy and resources were wasted by not doing that homework ahead of time. So I think that's again, a really, really smart move. Our final question is for you, Joby. We're getting some questions about the on-demand material. Folks would love to be able to share this with some of their colleagues. How and when can they get that?
Yeah, absolutely. The on-demand materials will be emailed to everyone within 2 business days. This will include the link to the recording of today's presentation, as well as a PDF of the slides. And Jess, Neeraj, Naveen, do you have anything else you want to say before I close out the webinar?
Just wanted to say a great thank you. This has been a fantastic conversation, a lot of smart ideas. I know I learned a lot, and greatly appreciate your feedback and your insights.
Great.
Thank you very much for having me on the webinar. Thanks a lot.
And thank you everyone for really attending the webinar, and hope it was useful. And you are taking some learnings back to your own workplace to see how more efficient you can make your process. Thanks a lot once again, and really have a nice day. Over to you, Joey.
Thank you. That's all the time we have for today's program. I just have a few final housekeeping notes to go over before we officially close out. If you could please fill out the short evaluation form that will appear once you close the webinar. This will better help us serve your needs in future webinars. And thank you again to Naveen, Neeraj, and Jess for a great presentation today. And thank you to all of our attendees for taking the time out of your busy days to join us. This webinar was brought to you by IOFM and sponsored by Datamatics. Thank you all and have a great day.